Hey guys, what's going on? Welcome back to the channel. My name's Alex, and like I said in the last video, I'm going to be going through today how I managed to pass the FTMO verification stage of the Funded Trader Challenge. So right here in front of you guys, I have my equity curve. You can clearly see I made most of my profit off one trade. I stayed around break even, a few micro lots to start the challenge just to get my days going. One little loss, just under 1%, 1.5% win, another loss, back into drawdown, back into profit 1.5%, back to 0.5%, and then one beautiful trade which took us straight to the profit target of 5%, so $2,500. For this challenge, the verification, I actually didn't over leverage at all, so I was able to make the profit target and the days and not come anywhere near the max loss or max daily loss by just risking 1% per trade. If I go down here, you can see that my average profit was 2%, just over 2%, while the average loss was only under 0.5%, which doesn't really show it fairly because of the amount of micro lots you can see. 1, 2, 3, 4, 5 trades are actually done with a 0.01 lot size, so it doesn't really represent perfectly. Same with the risk to reward and the win rate. So as you can see down here in my trades log, I took 3 solid winning trades over the course of the verification. So this one here on the Euro USD, just over 1.5%, GBP CHF almost 2.5%, and then the final trade on USD JPY, which was over 4.5% profit. And then we took a couple of losses. So we took micro lots that don't really count. This one was break even, USD CHF break even, just over 0.5% loss, just over 1% loss, just under 0.5% loss, and then just under 1% loss. So our winners were obviously a lot bigger than our losers, which is a big thing when it comes to trading, is letting your winning trades run and cutting your losing trades as quickly as you can, rather than, just waiting for them to make profit, because chances are you're not going to make to profit and you'll end up hitting your max daily loss and losing the account. So as you can see, all the money was made on the buy, 8% worth on the buy, and we were down almost 3% on the sell. So in the verification, the buying was much more profitable than the sell, which I have found with this strategy the buy has been a lot more profitable. So yeah, we will jump in and I'll go through my GBP CHF trade here, which was just under 2.5%, and I'll go through the USD JPY trade, which got us to the profit target. So yeah, we'll jump straight into that GBP CHF trade, which I've got lined up ready to go. So when I come into this chart, I see price clear as day in an uptrend, making higher lows, higher highs. And then not only that, my 50 EMA is trading above my 200 EMA, which is also signaling buys. So yeah, 2 confluences to buy the market. So I'm looking purely for buys. Whereas if the 50 EMA was trading below the 200 EMA, I wouldn't be as keen or as certain on to just be going for buys. I could be looking for sells. There's a little bit of uncertainty there as to which way the market's actually moving, but clear as clear, the market is moving in an uptrend, making higher highs and higher lows, and rallying to the upside, a lot of bullish pressure. So as you can see here, my next confluence is the level of support and resistance right here. So I'll get rid of that and I'll show you guys how I find this. So, price made this big move to the upside, probably about 3 or 4 hours worth of just pure moving to the upside before this little retracement. So price made a level of resistance right here. Price was unable to push through this level and was pushed back downwards from this point. Price then managed to push past this level and then it made a retracement back to the level to retest it as a level of support. So you can see price hit this level. So this, this rejection off this level shows me that price, tends to, or, has tended to be rejected from this level. It's pushed down, it's then broken through, and price does move like a magnet, and it does like to come back and retest those levels of support and resistance. So price has come down, back in. This candle right here has tried to push back through the level, been clearly rejected with this big wick. Big wick here shows clear rejection, that price is unable to push through the level, and then the next candle closes green, showing a continuation to the upside, and that is my confluence to say, okay, price cannot push back down below this level, and it will continue to go up. So that is one of my confluences there. I then take my Fibonacci, and I draw that from the bottom of this push, to the bottom of the most recent push, to the direction I'm going, to the top of that push, and then I watch where price retraces back into the Fibonacci. And as you can see, like I said in the last video, the golden zone I like to use, and a lot of traders do like to use, is between this 0.5 level and this 0.618 level. And as you can see, price, beautiful wick rejection straight off the 618, and this level, this area between the 0.5 and the 0.618. So that is my second confluence, price is going to reject this level and continue its move to the upside. And then as one other confluence, before getting into this trade, I did look at the RSI down here. Now, what I can see is that on the candlestick chart, price is making higher lows, clearly higher lows. Whereas if we go down to the RSI here, if we go from that same low right here to this other low, price is actually making a lower low. You can see price is going lower and making lower lows in the RSI, which is a bullish divergence and signals that price will be continuing to the upside. So there's three confluences right there that price is going to the upside. Now, when I'm, taking a position in this market, I'll take that off for a second and I'll show you guys how I do it. So, we're looking for a buy. We're jumping in straight after this bullish candle. It's closed. We want to make sure it's closed. Very important to make sure it's closed and you don't take it halfway through, because price can easily reverse and close below this level, and then you don't have a valid entry anymore. So we put our entry right here. Now when I'm putting my stop, it's easy. I put my stop just right below where this wick went, or this last level of support was. So if price is to hit the stop loss, it's going to have to break structure and push below this level of support and resistance, which in this case with the confluences I have is very unlikely. So I'm going to place it below this wick. Anywhere below this wick, you can put it right in tight, or if you want to risk it a little bit more, you could put it right up close to this level and right underneath these other bunch of wicks here. But I like to just be a little bit more safe and just put it below this wick anywhere there, 16, 17 pips right there. And then when I'm putting my target, I'll zoom out a bit, I'll go to a higher time frame. And you can look across, so you can see this level here was probably the next level of support or resistance, which in this case was a level of resistance. So we will put our take profit about there, right on that level, which as you can see is about a 2-to-1. I'd then take maybe half my profits there, and then I'd leave the other half to run up to this level right here. So I put my next stop up to here, somewhere around there, where price has made a level of support resistance in the past and could bounce to the downside from. And you can see that clearly got hit as well. So I actually did only close my entire position about here in the challenge at about, I took about 2.5%. So somewhere around there, beautiful, beautiful trade, minimal drawdown. And so for the second trade, which was on the USD JPY on the 21st of December, right here, we'll just get back to that. 21st, all right, we'll just zoom out and find the trade right here. All right, so let's just remove everything we have here from the chart. So we'll get rid of all these levels. All right, so with this trade, same thing. Price all the way up here is clearly making higher lows, higher highs, and is moving in an uptrend. And as well as that, the 50 EMA is trading above the 200 EMA, and we're looking for buys purely, just buys, nothing else. So I am, looking at this chart, I can see price has made this little move here. It's bounced off my 200 EMA, it's moved to the upside, it's come up, it's continuing to push up, and then it's make this little push back to the downside, a little correction in the market, it pushes back and makes a tweezer bottom is what this is called, tweezer bottom rejection off of the 50 EMA, which can be used as a level of support or resistance, depending which way the market's moving. If you look to the left, if I draw this little level of rejection, drag it over a bit, you can see price also made a level of resistance only a couple of hours before at this same level. You can see price has tried to push through, it's wicked up, it can't push through, and it's been forced to go back down. It's come back up, rejected again, pushed back down, before finally being able to push through. And like price loves to do, it has come back down to retest the level with this beautiful tweezer bottom, which is another sign of the reversal to go back to the upside. Not a reversal, just a retest and a continuation to the upside with the bullish pressure. So if I take my Fibonacci, I take it from this, so this price got rejected here, it got pushed back down. So he says 3 bearish candles in a row, it got pushed back down to here. So we get our Fibonacci and draw it from the bottom of this push. This singular bearish candle here, I don't count as a correction in the market and a move, as there was just one in between all of the bullish candles. So I then draw it to the top of this push, and I see price has pushed back down, and this tweezer bottom actually has formed perfectly in the middle of my golden zone and bounced cleanly off the 0.618 level twice. So beautiful trade, and I have great confidence from here that price will go in my favor and go to the upside. And then looking at price action, I can also see that this first pin, the first wick closes bearish. I then want to look for a bullish engulfing candle that pushes to the upside, which we started to get, but it actually closed with a big wick of the upside and the downside. So then I wasn't quite keen to enter just yet. I waited for price to then make this big bullish engulfing candle. On the 5-minute chart, I actually waited for it. It came clean as day, and we were straight into the position. No problems there, and then price was straight into profit. If I show you how I put my position in again, sorry. So I get my buy position. It was somewhere around here, I think, on the 5-minute chart. My stop loss obviously goes underneath these wicks. Like I said before, if price is going to move back to the downside, it will have to break structure, which means price is likely going to continue to the downside from there. So, we'll put our stop loss just below these wicks, as price is unlikely, if it's moving in the uptrend, to reverse and push past those level of those wicks. So we put it just below, maybe 7 pips, maybe even 8 pips, just to be a little bit safer, just depending on the spreads as well. So 8 pip stop, and then this trade did end up going 5-1, or 4-1. So yeah, somewhere around this 32, 33 pips, which usually I would have exited the trade earlier than I did, but I was really keen just to hit the profit target, and I just let it run, and it ended up running exactly where I wanted it to. So once price was up here somewhere, I moved my stops to break even, so I was risk-free in the trade, and then price came back. It actually retested the 50 EMA again before rocketing straight to the profit target. So I was a little bit worried here I was going to get stopped to break even, which isn't a problem, but price did bounce cleanly off that EMA and did run straight to take profit. Usually I like to look at the RSI, and I would have sold when price begins to become quite overbought on the RSI. So outside of this 70 level, price is classified as overbought. So for me, I would tend to exit somewhere maybe around here when it's pushed up to maybe the 75, close to the 80 level, but I ended up just leaving it and being like, what's to lose? I may as well just let it run. And I think I moved my stops to about 2% profit, so I was guaranteed at least 2%, and then the reward was the 4.5% to finish the challenge. So verification, sorry. So yeah, we were able to get that perfectly, and that was verification complete. So I hope these 2 trades I've gone through has given you all a little bit clearer vision into how I trade and how I managed to pass this verification and the challenge, and am now a funded trader with FTMO. If you have any more questions about anything to do with how I trade, the challenge, FTMO, my experiences, just let me know in the comments, and I'll be sure to get another video out soon going over how my FTMO funded account journey has been going so far. So yeah, thanks for watching. Like and subscribe. Hope you're enjoying the content, and I look forward to seeing you guys in the next one. Thanks.